Hey guys, Akil here. Welcome to a special midweek video. I usually wait till the weekend to give you guys these things, but I wanted to share with you an awesome trader assessment that we did in my live room on Tuesday. If you guys are unfamiliar with what trader assessments are, essentially what we're doing is we're walking through a trader's trade plan, and we're really poking holes and attempting to fill gaps in that trader's rules-based trading strategy. So if you are a new or struggling trader that maybe doesn't have rules for how to trade and you're looking to figure out what it looks like to have them, you definitely want to check this out. Now, before we get into it, two things I want to remind you of. First, next week, 3-day free trading workshop. Registration link is in the description box below. Whether you want to attend live or whether you want to have the recordings mailed to you at the end of each day, you need to register and you don't want to miss it. Secondly, this Thursday, premiering at 10 a.m. New York time, we are going to showcase our new show, The Trader Coffee Break. Me and Jason Greystone have a brand new YouTube channel. Just go over YouTube, search Trader Coffee Break, and you'll find it. Make sure you subscribe. Make sure you check out the pilot episode. They're going to be short, kind of coffee break, unfiltered conversations on everything you need to know about trading. So make sure you subscribe to the channel and check it out. Yeah, that's it, I think. All right, enjoy this video, take notes, hit that like button, and leave me a comment if you have any questions about anything we discussed. Looks like we are trading at a VS1 level. So let's see more specifically where we're at. My good friend, the horizontal line, bang. And we're right at, looks like a minor level of structure looking left here on the daily. Yeah, so a little minor level of structure here on the daily looking left with a major level above it. 122.60s would be the start of that. 122.60 to about 124 even. So just to give some perspective on where we're at. Julio says, I normally don't shoot for an extension, but in this one I'm doing it. And I have the same question as Orsi. Why? Well, I guess here's the better question. Are you allowed to? Are you supposed to? That's the first answer. So it's a trend continuation trade, I'm assuming? Trend following trade? It's a trend following trade. First I thought in 161 and all right, we got let's an equal measure move, okay. But a bullish trend following trade, right? What time frame is the trade executed on? Just so I know what I'm looking at here. 4-hour chart, all right. We got our perspective from the daily. Let's go into the 4-hour. And a pullback trade, maybe perhaps here. Something like that. Higher high, higher close. Right here. So higher high, higher close, pullback trade. Okay. So first and foremost, so what was needed for you to take the trade? Let's make sure it was a good trade first. You identified the higher high, higher close. You predicted that a higher high, higher close meant we were likely to continue higher. You said earlier your prediction on where, because we know the prediction is a 3-part process, right? Prediction is not only what is price action or what direction is price action likely to go in, but where is it likely to go to, and how are we likely to get there? You got to be more specific. Fibs and RSI don't tell me anything. You got to give me more than that. Imagine I'm someone that has no idea what trading is, and you're explaining it to a newbie, right? So let's start off by just looking at your projection here. And you know what? This can be better. I'm actually going to load up trading view. You can go in we can go in replay mode here, Swiss in. That'll make it look more lively. That'll be fun. Give me a second to load up trading view. Here are some notes from before, right? Our previous trend continuation trades here, but this is going to be a new one. So let's delete that and let's go back to here. So again, at this point, this just starts the pullback. We've got a higher high, higher close. We're starting to pull back. Julio's making the prediction that of we're likely to go higher. The next question is where are we likely to go higher to? We have the start of AB equals CD pattern right there. We don't have it yet. We can draw that on later, but we have he's looking for a 1618 Fibonacci extension. Am I correct in saying that? I believe you wrote that in, but I'm not sure. 127. Okay, 127. And that lines up with the previous level of structure looking left you had on your radar? All right, so let's look at this and let's address the next question. So what did you need to enter the trade? What needed to happen? Walk me through your rules of engagement. If I identify higher high, higher close, then I look for pullback. If price action starts to pull back, then I need, see that if then mechanical? I got a tweet from a person this morning while Julio is typing in. I'll read it to you real quick. But he said trading check. As a trader or long-term investor, a strategy is important. It's also important to have a plan on how to follow the strategy. In aviation, they have been working on how for a long time and found the use of checklists as a useful tool. And we talked about checklists. I said I think checklists are super important. That means very important. Keeps you on task. And if followed, big if there, right, Greg? Right? Big if there. If followed, stops you from overlooking key things that can get you in trouble. In aviation, this can save lives. In trading, save accounts. And that's what we're trying to do when we talk about rules-based trading. We're just trying to set up a checklist, whether it's a literal CTS checklist where you're running through and giving things a point score, or it's a process where it's an if-then thought process where you're going through your checklist. Okay, if this, then look for that. All right, move to the next thing. If this, then looks for that, like a nice little flow chart. And what that does is it keeps you on task. It stops you from making mistakes. Because guess what? If anything you see on the chart or anything you do deviates from what you're supposed to do in that checklist, you know you're in a bad trade. Now, the bigger question is, do you care or not, right? And that's the other issue where you know you're not supposed to do it, but you do it anyway, right? Greg, we keep picking on Greg until we shame him enough to follow his rules. But yeah, that process is important because it gives you structure, it gives you guidance, it stops you from kind of being just free. So Julio said, okay, higher high. So only thing needed was a higher high, higher close, nothing else, just to be clear. RSI didn't have to do anything, specific fib level, anything like that. Just higher high, higher close. Just want to be crystal clear before we move forward. All you said before, and no, you say it. Tell me what you need. What do you need? This is your trading plan. You tell me what you need. I'm just trying to remember what you wrote. I know you said fibs and RSI, but you didn't give me any specifics. Like RSI, like does it just have to be on your screen? Do we need to use it? Does it need to do something? Does it need to be in a certain level? Do we need to hit a certain fib? Let me, talk to me. Talk to me, man. Give me the deets. It's like a weird first date. I'm trying to figure out stuff about you and you're not telling me. What do you do for a living? Yeah, work. Oh, okay. Well, that sounds like me on a first date. What do you do for a living? Work. Well, what type of work? Trade. What do you trade? Money. Are you a drug dealer? No. Well, pharmaceuticals. Greg's like, is that what you use on the bad dates, Greg? The blind dates that don't go and someone shows up unexpected. What do you do for a living? Serial killing? Okay. So breakout, pullback into fibs. Didn't get RSI, but I'm working in more. Okay. So you don't need RSI. So right now I have some concerns, right? Because we've been here. A lot of us have been here in the live room and for a long time. And one of the things is that if you have a secure set trading rule plan, it shouldn't take more than 6 seconds to recite it. So for example, here's what I would say, right? Akil, what do you need to take this trade? Well, if I get higher high, higher close, then I need pullback. If I get pullback, then we need to come to a Fibonacci retracement level, 382 or 50%. If we come to a 382 or 50% Fibonacci retracement level, then I need RSI to go overbought. If RSI goes overbought, then I need higher high, higher close for my entry. If I enter, then targets go at the 127 extension of the previous swing low to swing high. Stops go 1 ATR below the swing point of my entry. Right? Now that sounds very, very complicated, right? That was a lot and I rambled it off pretty quickly. But do you know why I was able to ramble it off pretty quickly? Because it is consistent and it's rules based. So I know exactly what I want, or exactly what I need rather, for every single trade. Now, if you ever hear something like, well, usually, sometimes, or as Orsi pointed out earlier when you said, well, I don't usually do this, but, right? That's another thing that you don't want to hear on the first date. I don't usually do this, but, because that means you do. You do usually do it. You're just saying it to save face, right? You do usually do it. But we want to be concise. So what you need to work on with the plan, Julio, is being more detailed, more specific with what you need, right? You can't just say, I need fibs, right? Tell me, do you need price action to come to a certain fib level or any fib level? Does the RSI need to be overbought? Do you need diversions? Does it need to stay above a previous high of the RSI? Whatever it is, right? And you don't need to do it now, but write it down on your to-do list as you continue to progress and evolve as a trader. Start writing down, hey, these are the gaps that I need to fill in my trading plan. Does that make sense? And it just needs to be more detailed. And that's a normal thing, right? That's a normal thing. We deal with traders all the time where the trading plan is tough. And that's why I always advise, you can shoot them to myself, shoot them to Greystone. You can share it with someone on the platform if you have an accountability partner, right? We could look at it here in the live room or in the Q&A sessions, right? But usually it's because we kind of know in our head what we want, but we don't necessarily write it down. There end up being gaps in our trading plan, which are not always caught by ourselves, but pointed out by others. So, and that's the biggest benefit. You have a valuable network of traders. I was listening to Fitzy's, Stevens, his accountability session the other day, and he was talking about the groups here on the platform. He said they're I don't know if undervalued, they're underused. There's so much great information in these groups, depending on if you're a daily chore trader, if you're a pattern trader, if you're a structured trader, right? If you're, whatever it is, there's so much power in those groups, in the community of people who have done it, that are willing to give back and help and lend their opinion, especially to your newer traders, right? There's nothing better than talking to hundreds of traders that have made the same mistakes that you're about to make, and them telling you, hey, you probably shouldn't do that, or don't waste your time doing this, or hey, try this instead. It just decreases the learning curve. That's the power of being around other successful people. So use them. Find someone here in the room and be like, hey, do you mind if I shoot you my trading plan? You mind if I use the coaches, right? You mind if I walk you through this, right? It's so beneficial. So no rules yet. So let's click through. We're looking. We got our pullback. We got our higher close. This is the entry, I'm assuming. 3-bar reversal here. Yep, that's the entry. Now, you said you don't normally, this was a long time ago, so I may forget it. I don't normally shoot for the extension. So what made this one different? Was it because it's the only way you can get risk reward to work? Speaking of that, what's the stop loss? I'm going to hound you some more while we're in trader assessment mode. I get kind of mean in trader assessment mode. I mean, I'm nice compared to my mentor. My mentor made me cry, basically. He wasn't mean, he just made me cry. One single tear, of course. But you got to reverse right at the 382. So not a good risk reward. So another red flag that I see here, right? If you're in a situation where, we need 3 things to make the trade work, right, guys? We need entries, stops, and targets to all line up. And I told you this before. If you're new to trading, right, we got a lot of new traders here in the room today. This is the unfortunate truth, right? Very rarely are you going to get all 3 things lined up. I'm sorry, it sucks, it's depressing. It's another way the market baits you into making mistakes and doing stuff you shouldn't, but it's very hard to get everything to be in alignment, right? Usually you're going to get 1 out of 3, 2 out of 3, or something like that. In this situation, right, our trader says that, and correct me if I'm wrong, the reason you're shooting for extended targets, I don't care about the data being a little bit different. It has nothing to do with the general process of what we're talking about. The reason you're shooting for extended targets is because you couldn't get a 1-to-1 risk reward, or your whatever your valued risk reward is with your normal targets, correct? So you're making the trade work. We don't want to do that because now you're breaking your rules. What should we be doing if we get a situation where we got everything lining up, but the risk reward is off? What should be the appropriate approach? See a few people typing in here. Half size? No. Nope. Not half size. Nope. Same problem. Process-based problem. Still a problem. Half size. Nope. Wrong. Stay out. Does it meet your rules? If your rule requires that you have a specific risk reward and this one doesn't have it, does it meet your rules? Does it meet your trading rules? No. Are you supposed to take trades that don't meet your rules? 100%. No. Stay out. Find a pillow. Yell and curse into it. Don't take the trade. It is not a trade that meets the rules of your trading plan. It's not a good trade. Don't take it. Now, if you're advanced, maybe you have an alternative entry, a second strike entry. Maybe you're like, hey, the higher high, higher close doesn't work. But if we get a double bottom, right, I can take that because it may give me a better risk reward. But if it doesn't, you just got to let it go. Again, as you get more experience, you're going to end up having maybe second and third strike entries, so different opportunities to get involved. Maybe you can even do some lower time frame stuff. But in general, if the trade of what's on the chart doesn't meet your rules, 100%, all of it. It's not who meets most of them. No, 100%. If it doesn't meet it, you let the trade go. There'll be more. Trust me. I've been trading since 2007. I can confidently tell you there will be another trade at some point. Except for that 2014 year where there's no volatility. Whew, that was a tough one. All right, so now we got that out the way. So that's another red flag we got to fix. Boom. Stop loss. Just to follow up and continue while we're already down this road, we're gonna finish it. 1 ATR below the lows. Okay. So you end up having a pretty decent. Just check to see what this is. I have my ATR in here. Yeah. Entry 23. You end up having a pretty decent trading opportunity here. 25, right? I'm so happy. My kids. That's not right. 55. Sorry. So 127 extension here. Pretty decent risk reward. Aside from that, I think it's a great trade. I think, obviously we've liked Swiss yen from way back here for pullback trades. I think there's room to go higher. I think the target projection is good. I think you can probably even be a little bit more aggressive with targets or secondary targets, if I remember correctly. I forgot I switched platforms over here. But let's go back to this level. Let's see what that does. You can probably be probably a little bit even more aggressive. I think you can safely shoot for the 1618, to be honest, or maybe a secondary target there if you're allowed to. But yeah, so I like, and let me know what you guys think here in the live room. I like every bit of this trade except for the fact that you didn't follow your rules. And we need to work on becoming more specific with the rules, obviously, for the entry. But you said that's a work in progress. But yeah, aside from the fact that you adjusted the trade to make it work, that's the only thing. Greg says, I don't like the stop, though. You don't have to like the stop, Greg. All that matters is that Julio likes it. Greg says, so far, there's no indication that the retracement is complete. Well, here's the thing, Greg, about that. And this follows up the conversation we had earlier in the day, right? Right. So what we're anticipating in this type of trade is that this is going to become an outside return, correct? And this goes back again. We had an earlier conversation, if you guys weren't here, on there is never 100% certainty in the market. We never know what's going to happen. So everything is a probability-based prediction, right? We're predicting that price is likely to do this. We're predicting that because of this, right? So we're looking for specific entry reasons that tell us or give us the ability to think that, hey, price is more likely to do this before it does that, right? So here's the thing. Greg said there's no indication that the retracement is complete. Guess what? We will never know that the retracement is complete until we extend. Just like in our rules, remember our rules for identifying a trend, right? When does an outside return become an outside return, right? An outside return doesn't become an outside return until a new structure high is created. So we never know with certainty until it has already happened. Let me know if that makes sense, because that's very important, and that goes back to the conversation of again, earlier we spoke about how You expected the market to go in your direction right away. And I said, that's not a good expectation. Now, could this be a complex pullback? Sure. Could this end up being a head and shoulders? Sure. We just don't know. What would be the safest place to put a stop loss as far as just from a trend reading perspective? Where would you guys say the safest place is at to put a stop loss? If you want to be as safe as possible, safe being relative to the trend, not like risk management. Because where would, right? We'd want to put at the place where the outside return, the trend is violated, right? We would go into a rotation here. So now the question that Julio has to ask himself is, does he want that much open position risk? Does he need the market to travel all the way that far to tell that he's wrong? And for some traders, you'd be like, yeah. Like, I need it to be that far. Like, I need to have my stop loss at the place where I know the trend is wrong. For other traders, they'll say, you know what? This is my reversal reason. I've chosen this reversal, this 3-bar reversal for a reason. I'm going to put my stop loss right here. And guess what? If price action were to do some wiggly little dance, right? Because we know this is what you have to accept if you're going to be a trend trader, right? I'm willing to take the trend. I'm willing to be stopped out right here. And I'm willing to take another trade down here, right? I'm willing to take a second shot down at this level. But yeah, we have to erase this idea of certainty in the market. How do we know that the outside return is complete? We don't. We are in a game of following the probabilities. So we're looking for signs in them. We're looking to do good analysis. We're looking to make predictions off of what we analyze. And then we're looking for reasons of entry that support our predictions, saying that if I see this, then that's a sign that price is likely to play out in my direction. But the key word there is likely, because we just never know. We never know. And you can be aggressive, you can be conservative. That's going to be up to you as a trader, right? If you're conservative and you need a deeper retracement so that you can get your stop loss under here, that's fine. But you have to accept the fact that if this thing goes straight up, you may miss the move. If you're going to be aggressive and enter on a shallow pullback, you're going to catch these moves, right? Again, stronger, we talked about this earlier, stronger trend, shallower pullback, right? Deeper trend, or deeper pullback, I should say, weaker trend. But if you're going to shoot for these moves, you have to accept the fact that sometimes that move's not going to happen. And you may have to do it multiple times, or you just may maybe stopped out for a bigger loss if you ever stop loss all the way down here. Everything's a give and a take in trading. Julio says, real quick, Keel, this is a good segment, by the way. I might turn this into a video. I haven't done like a midweek video. No one watches my midweek videos, so that's why I don't put them out there. Maybe I'll make an exception. This is a pretty cool segment, just to chop it up. Keel, in order for me to become better with rules, I have to back test each set of rules and see the results, right? Yep. You have to develop rules. You then have to back test and go through the different levels of back testing, right? Preliminary back testing, eye test before the actual kind of hardcore back testing. Hopefully you have your rule set as solid as possible, or at least what you want to test before you get into the real back testing, because that could be pretty time consuming. But yeah, you formulate an idea, you put stuff in a rules-based format. You have your secondary or whatever else you think you may want to take into consideration, and then you back test it to see if it works. That's the final thing. Like, does my idea actually work? And the truth is, many times it doesn't. I very rarely is something going to work the first time. But the cool thing about back testing and all the levels before your actual back testing is you spend a massive amount of time in the market. You make a massive amount of, if you're doing things right, you're making a lot of observations. You start to look for little clues where you're like, okay, I like this 3-bar reversal, but I only like it if it goes to the 50% level, or I only like it if the RSI is oversold, or I only like it if the stochastics dips back above, something of that sort. And then you add that to it, you test it, and eventually, hopefully, you come out with something that tastes good. But yeah, it's part of the process. But you got to have you want to make sure you write down what you need first, though. So cool stuff. A little trader evaluation is always, trader assessment's always fun. You guys like that? We haven't done one of those in a while. That was a good one. Thank you for being a good sport, Julio. Sometimes people don't take it too well. Sometimes people have a lot of pride and they're not in a position where they want to learn. They just want to argue. Well, look, Akil, I'm allowed to break my rules. It's in my trading plan that says I can break my rules. I'm okay. All right, go. I don't care. I care. I want you guys to be good, but it doesn't affect my P&L. Like if you got a rule that says you're allowed to break your rules, like I'm still sleeping good at night. That's your money. Don't. I'm not personally offended. I'm just trying to help you out. We've had stuff like that before. Whereas like people ask for your advice and then but then they get angry when you give it to them. Hey, what do you think about this entry? Well, I don't like it because, well, who cares what you think? Well, why did you ask me? I'm just giving my opinion. I'm sorry. Good stuff. All right, man. Let's go to pound.